There are other aspects of this business, especially if you continue to buy and hold and not just do strictly transactional business, that might go a little under the radar.
What's going on, guys? Welcome to the Collecting Keys Real Estate Investing Podcast. I am Mike DeHaan here with my co-hosts Dan Austin and Dylan Cook. Hey, what's going on, guys? Rounding out July. Dylan, you were just complaining about how all of your deals have been tiny, just like something else that you have to deal with is tiny every day.
No, he's the real estate genie. We already know his nickname, dude.
Shut the fuck up. You'd have to finish that sentence. I knew where you're going.
Now, it is a valid conversation, though, with transactional real estate in general, right? And I say that as a kind of a broad term because I was talking to another scale member this morning, and there's always this kind of pattern that occurs where the smaller the deal is, the more work it seems to be.
Oh, 100%.
And this exists on the wholesale side. It exists on the lending side with our SLA Capital lending business, right? We have a loan right now that's like a $90,000 loan that we're going through the fucking hoops trying to close it, right? It happens with your flips. If it's like a tight flip, for some reason, it's always so much harder to get out of it. I've heard the same thing from real estate agents that are doing listings, right? If it's like a lower quality house, it's always a harder listing. What is that? I don't know. But they are important, though. And you're about to say that a lot of your deals right now have been smaller.
Yeah. I mean, the past like 3 have been like 2,500 and 5 and 6K. And especially after you're paying the acquisition guy, I'm literally not making anything.
But I remember years ago, back when wholesaling was like starting to get popular, right? Which Dan and I were, I would say, fully like in the mold of like when it was on the up and up. Like we were definitely after the early adopters, but before it became like Guru City, like it has been since 22, 23.
We turned it into Guru City.
We kind of did. We participated in that. But there was this whole movement for a while. If you make less than $15,000 or whatever your number is, that you don't even bother doing the deal. And that's kind of a shitty mentality because you need those small ones to keep the lights on, right? And even if you make fundamentally nothing because you have an AM,
you didn't
lose, right? And it's covering your cost per deal and it is keeping your team engaged, which is worth something.
Yep.
You know, if you're not a solo operator.
And sometimes there's other intangibles, like you find a buyer that you didn't have before, right? That you can sell a future deal to that might be a bigger spread.
Keeps you active in the community too. People see you.
Or if it is a tough deal and you have to help the seller, can you turn that into like a 5-star review on Google, right? And make it part of like your larger sort of thing. You can add that extra deal to your Instagram bio when you go and you say, I've done 67 deals now.
I like to call this the effort to upside matrix. I'm going to coin that.
You're just making shit up.
I am making shit up.
The effort to upside matrix. So the ETUM.
The ETUM. And so when you're looking at the ETUM, sometimes the effort is max when you're up here, but also when the effort is max, the payoff is low. The goal is to be effort low, max payoff. And so.
Okay. So what you want is
this is the unicorn up here. This is the unicorn.
You were looking for like a lay down lead that's like a 50K spread.
Yes.
That's what you want.
Yes. Yeah. So, but there's a more to this story. It's interesting because there is looking at the silver lining and the upside in some of these deals. Like you said, you get a 5-star review. It keeps you active in the real estate community. You're selling deals. Even if you make $5,000, it covers marketing costs, right?
In our type of business where it's not like a hard sales thing, right? Like it's very opportunistic and, you know, it's very akin to fishing, right? Like you're kind of throwing lines out there and you have to wait for the fish to come to you. No matter how hard you try, you can't force someone to sell you their house. Mm-hmm. Right. But if you want to catch like the trophy fish, you also got to be willing to catch some small fish. Right. Yes. And that's sort of what keeps you engaged. So you don't just like zone out for fucking 9 hours circling around on a boat in Maui and wondering why the hell you spent $2,000 on this fucking trip. And it's definitely not based off of a real experience.
The moral aspect of this too is like I think there's 1 or 2 occasions where basically like we still did the wholesale transaction. I literally made nothing. Buyer got the property. The seller still got out of their situation. There just wasn't enough spread. You know, and that was before I had an AM. Like now that'd be a little bit tougher because I wouldn't want to pay him like basically to sell the house. But if you can still like get people out of their shitty situation, it still helps.
Yeah.
Yeah. I mean, we had one like a month ago that we wholesaled for $0.
Yeah, exactly.
Right. Like we just assigned it directly to the buyer just because we want to get the deal done for a seller because they freaked out. And tell you what, those are the most ungrateful fucking sellers. We should have let them burn. Fuck those.
No shit. That does happen.
I usually just ask the buyer like, hey, you know, if you make more than what you think you're going to do in the back end. Almost like a handshake agreement, like throw something my way.
Yeah.
And sometimes it works, sometimes it doesn't.
Yeah, it doesn't. And we've done those too. Like we have actually some community members that we have done deals like that where it was like kind of questionable on like the buy, even for like a $5,000 or $10,000 wholesale fee. And so what we'll do is we'll sell it to them for scratch, and then they'll flip the house and then they'll pay us afterwards. You want to make sure that you have a good relationship with that person before you do it.
So there are definitely people that will take advantage of that because there's losers out there.
Yeah. And then if you're really smart, you own a hard money lending business and you have them do the loan through you. So you get paid anyway.
Right, exactly.
Well, now I have a system too. I just sometimes I'll be like, hey, I'll list this on the back end as a flat fee listing for like $500.
Yeah.
Right. And then, that way they can make more and they're not paying 3% to a realtor. It doesn't take a lot of my time.
Totally. That's fair. That's actually a good technique there, Dylan. As long as assuming you don't mind doing the effort to get it listed.
Yeah. I mean, it takes me like 2 minutes.
And Mike, you eloquently explained what I was going to say. And then to put a cap on it, the other end of that spectrum is, I was reviewing some underwriting in our CRM today, and the AM was asking about the seller finance deal for a duplex. The seller wants $500,000. The Zestimate's $430,000. It's a duplex, so nobody's buying those right now. He also has a $1,800 a month mortgage, and she's trying to do like a seller financing deal on it. And I just looked at it, and it's just like, well, it's more of a sub 2 deal, which I know is going to be a headache and a pain in the ass. The guy wants $500,000, so the underwriting doesn't mean that we just give them what they want, right? It's just like, let's just do a quick sniff test and be like, no, dude, like, sorry, don't waste your time on the lead. Give them an offer. I don't ever advocate throwing a lead out, but give them an offer that actually works instead of trying to meet them in the middle on a really, really terrible lead where you're wasting your time. And that's where I see people spending too much effort with almost no payoff or never payoff. And you're thinking that just because they're willing to sell to you doesn't mean that it's a deal.
Totally. Yeah. We see that a lot with like new people or people that kind of like lack confidence in the sales process, or they don't like being told no, is they try to like craft these deals that don't really make fundamental sense because they think it's what the seller wants to hear.
It's like, who's the buyer of this?
Honestly, it's like the entire crux of like the sub 2 pace mortgage movement. It's a bunch of like peasants that are like so afraid to like make a mistake or take any sort of quote unquote risk. They're trying to make these super complex deals that they feel like is a win-win for everybody, but no one can actually understand. Right. And then they get offended when you don't understand their freaking calculus problem they're proposing to you, which actually sucks for everybody.
Which is probably not structured in the correct legal format anyway.
Probably.
Yeah.
Sure not.
Definitely not. 100%.
Exactly. So like no one really wins there. I mean,
yeah. We haven't gotten any more like recent information on how a lot of that stuff, like last I heard, there was a movement towards a large lawsuit against sub 2 that was being pushed by a bunch of sellers that had essentially been misled by sub 2 community members. It was like one of those things that like you get in the mail, and it was like, if you participated in a transaction with these companies between this date and this date, you might be subject to compensation, right? And it was like a big thing. And that was like a year ago. I haven't heard anything more about it since then.
If they're smart, they probably settled. Like
probably.
A lot of the sellers probably didn't have the means for a lot of legal counsel, but
that's true.
Right.
Speaking of dipshits, let's talk about Fed rates. So this is my current opinion. Like this is just like the flavor of the month on the news when it comes to real estate and business right now is, our rate's going to drop. And first off, I just want to say that my opinion has now become that if you spend all of your time focusing on interest rates to make a decision, really that just means you just suck at business, because big picture, it doesn't matter. It shouldn't matter like that much. Sure, you can make more money, it can be easier, but like if you are paused or you're not doing stuff like you normally would because there's this uncertainty around the interest rates, just means you're a bad business owner.
Yeah. And they'd use it as a cop-out excuse of like, oh, I think rates are going to go up, so I'm not doing anything to sound smart. And really like, no, man, that's a 180 of what you should be saying.
Yes,
absolutely.
I think the challenge is more than anything at this point, because now every, Dick and Harry or whatever on the street thinks interest rates matter. Like people that don't even own houses, they're like, man, interest rates, they bring those down. I'm like, do you even own any stocks? Right? Like it's a very buzzy buzzword, but it's sentiment, right?
The second level of that is, oh, they're going to bring interest rates down, thinking that the 10 year is going to go down with that, when that's not necessarily the case.
Right.
Yeah.
Like, what does that even mean? Right. Yeah. Okay. We're going to bring interest rates down. And so the one thing is consumer sentiment. And so if you're letting yourself I guess, be part of that consumer sentiment as a business owner, as opposed to just like running your business with the correct fundamentals that actually make your business move. Because for the majority of people in real estate, although interest rates are heavily influencing like the market, the real estate market, it's not the only thing and it's not the most important thing all the time.
No. And the funny thing to me is when you have these small businesses, and so a small business, I'm pretty sure is any business doing less than $20 million a year. That's considered like a micro business. And then I think 50 to 20 million is considered a small business, right? And so every single person is listening to this show. You don't even have a small business. You have a micro business that no one gives a shit about.
It's not the only thing micro you got.
I knew that.
Oh, there you go. Good one. There we go. Like to overall market sentiment doesn't matter because you have like 20 customers, right? Especially.
Yeah, you're not big enough for that to be a big impact.
No,
right.
It doesn't matter at all.
Well, let's put it this way. Let's play a game. Like, what would it change? We're all in the same business. Everybody listening to this is in the same business. And let's just say interest rates tomorrow went back to what they were. We had like ZERP again. Like, what would that change for a wholesaler looking to be in real estate?
There'd probably be a whole bunch more of them that would come in and do bad business.
Right. So there'd be a bunch of competition. There'd be a bunch of crazy shit going on. And it wouldn't actually be an idealistic situation like somebody would assume.
Yeah. And I mean, and even then it would take a 6 to 8 month period for all the buyers to start to come in again on the wholesale side, right? It still isn't going to solve the fact that most of the American, homeowner can't actually buy a home right now just because of affordability and debt to income issues because asset prices are still so high. Even if interest rates came down, that's not going to solve that problem, but you can still sell properties to people that shouldn't be buying properties. We're selling one right now. And literally the difference of them being able to buy the home or not buy the home is like a $360 a year or a $300 a year HOA payment.
Oh my God.
A year, not a month, a year. It's like $3 a month. Yeah. And that's like the difference for them being able to fucking afford it.
Well,
it's ridiculous.
That's pretty tight.
But that still exists. This is in 2025.
No, I want to correct your statement, Mike. The difference between the underwriting and approving it, they still can't afford it.
Right.
Correct.
Yeah. Right. Yeah. They still can't afford it. Yeah. Right. The lender's just willing to make some money on them for a couple years.
But like big picture, it wouldn't change anything if you are running a decent business. It only would if you are somebody that gets by on luck or that's a complete opportunist. And the same thing continues on the multifamily or like larger asset size. Well, anything in real estate is going to be kind of like that. As if you were making like decisions based off of a completely idealistic situation, you have no longevity in your business at all.
I do think the FOMC meeting was a big nothing burger for the most part. The most interesting thing was two of the voting members, two governors, dissented, just meaning they disagree with Powell, and they said they wanted a 25 basis point drop. There hasn't been two dissenting members since 1993, 32 years ago. But those two members are both positioned to be the next Fed chair, especially Chris Waller. He's like probably the go-to guy that they've been throwing around.
Do you think that there's no world that where Bessent becomes the Fed chair?
Not right now. Yeah,
I don't think so. Not in the media. I mean, if Powell steps down or something, Trump gets to appoint him.
No, I think actually he has more what he wants to do as a Treasury Secretary than as Fed chair.
Oh, okay.
But my point being is Chris Waller, he's pretty much telling Trump, like postulating, hey, I'll do what you want.
Yeah.
I'll lower rates. Like just put me in the chair.
Which is so dangerous, dude.
Bootlickers, bro, everywhere.
So what's the advantage for these two? What would the advantage of Chris Waller? Is it a status thing? Because it's not a pay thing, right?
I just think they're career politicians.
He just wants an invite to the island, bro. He just wants the island invite.
Bro, the island's shut down, dude. Come on, now we're going to P. Diddy's house. P. Diddy just got released, bro. He's good.
Did he actually? I saw that as like a
I don't know.
Headline. I don't know if that actually happened.
How are we going from Chris Waller the Fed to P. Diddy in about the span of 3 seconds?
Well, they're all related, dude.
Because they're all the same people.
This is conspiracy corner over here.
It's not conspiracy corner if it's always true.
It is always true. They're all related. I don't know. I'm just, sorry to take us down that pipe.
The biggest thing is like, okay, if Powell's gone after his term and Trump gets to appoint Chris Waller, he's pretty much going to try to go dovish the whole time. Like rate cut.
Right,
I think that's the biggest thing I would look at from.
Does he get a different vote, or do they all still have to vote in majority?
They all have to vote in majority and not one other.
Okay.
It's not, the Fed chair doesn't get more of a poll than the other voting members, but it's very likely that
it's influential. There's behind the doors, handshakes, sort of stuff going on. I'm sure of it.
The fact that there has been 2 dissenting people in 35 years is pretty, or 30 whatever years is pretty telling.
That is pretty telling.
Yeah. And, you know, a lot of these people, right, it's literally all just about getting reelected and status. Everyone always thinks there's like a financial motivation behind them, but there's not. He's worth billions of dollars. He doesn't care. You know what someone who's worth $20 billion needs? More money. Not. Like, it doesn't fucking matter. Yeah,
I think it's just like a power career thing, right? They all like circle jerk around each other of all this, like with Bernanke, Yellen, all the past people who have been like Fed chair, and they think they're Summers. They all think they're God's gift to earth.
It's a similar sort of relationship with our small business versus larger businesses, where small businesses try to like think that these larger businesses are making like similar decisions. It's very similar to like people with politicians, where they think like the politicians are on like the same plane as them, but they're not. Like they're just doing completely different shit for reasons that you can't possibly understand, because the average person's just trying to live their life and pay their bills. Right. And like, so why they do wonky stuff, they'll think it's in their best interest, or it's so they make more money, or it's so own the libs or whatever. Like, it doesn't matter. It's literally just to do whatever is going to get them more votes. They can stroke their ego, you know, even more, and, you know, slowly manipulate themselves into a higher power tier for some other reason.
Wow. That really kind of paints politicians in a bad light, Michael.
It's what's crazy. It's always been that way. Like, I don't think there's ever been, you go back to medieval times, right? They weren't politicians back then. They were royalty, and they were also fucking scumbags.
Okay. So let's get away from that.
Oh, fine. Apparently this is not an entertainment podcast anymore. Freaking Dylan over here trying to sling facts.
There's a gray area between entertainment and fucking just being weird.
Okay, micropene.
God damn it. Get us on track, Dylan.
Yeah, I don't know what to say after that. I mean, the only thing that's even related to that we have in the things is like what the 10-year did in relation to this. And it really didn't do much. Like it went up a little bit. With the biggest thing, I'll say this. After the meeting, the consensus among the market and of the board members was it's probably going to be higher for longer, which has been kind of the sentiment the past like 18 months. And so if you're a real estate investor, kind of like we just said, that is expecting or theorizing that rates are going to go down here shortly because of everything that's in the media, you're probably wrong. And you're probably SOL if that's your business plan.
Yeah, definitely. If your business plan, goes back to the beginning of the conversation, is based on lower interest rates, you're kind of SOL for probably a long time. I think it was maybe a couple months ago, Dylan, you were talking about like a decade of inflation is kind of like some of the sentiment you had. Like the next decade, don't expect, not necessarily high inflation, but don't expect that rates are like going to change drastically to go down to 0 or 2 or 3 or whatever, you know? So
we would almost need like a Great Depression-esque crisis for them to do that, in my opinion.
Just kill people off. Just
get the depression over with. Is that what you're saying?
I just wish they would do it already. I mean, goddamn. Why does the collapse of the United States have to take so long? Just get it over with. I'm freaking bored waiting for it. You know?
I want a front row seat.
Yeah, right. If you are a real estate wholesaler and flipper and you want to be around other people that are looking to grow and expand your businesses in this ever-changing economy, then you need to check out our Scale community. Go to collectingkeys.com/scale and you can get all of the details there. But long story short, we are a small, tight-knit little group of serious real estate entrepreneurs that are looking to really make massive income and not just passive income through this ever-changing economy. So if real estate wholesaling and flipping is kind of your thing, go to collectingkeys.com/scale. You can book a call with me in there if you want, and I'd love to see if you'd be a good fit.
I was actually having a conversation with some folks, some non-real estate folks that were complaining about like baby boomers being able to buy houses, but we can't because we're young millennials and all this sort of stuff. And I was like, yeah, dude, moral of the story, don't be poor. If you want to be in America and you want to live the American dream, don't be poor. I mean, that's what it comes down to, because like, it's not, I say that facetiously, but it's like, it's not going to get any better for anybody overnight. Like it's not going to change. Like the fundamentals of the American economy aren't just going to shift and change just because sentiment feels good because of some almost arbitrary metric for the average American, which is, you know, every time interest rates.
The thing is, it's always been that way, right? It just doesn't feel as good when you realize that you are the person in that seat.
Yeah.
If you go back 100 years in the United States, it was exactly the same. If you were at the lower class, your life sucked.
Yeah.
My wife, when she grew up, she used to watch Little House on the Prairie.
Great show.
And we were talking kind of along this line. We were driving down to dinner last weekend. And she was talking about how in one of the episodes in Little House on the Prairie, because they're like kind of a rural family, right? They have their farm, whatever. But the rich family, they get a water closet, and that's pretty fancy because they get like the first bathroom that they've ever seen, right? But that's like what rich people had, and so that same sort of situation has existed forever, where if you're at like the bottom financial tier, yeah, your life just kind of sucks, honestly. And if you go back even further in time, it just gets worse and worse and worse and worse until the poor people are out there with a 70% infant mortality rate. They're living in the mud. They have zero education. They have no teeth. They're all dying when they're like 35 because they're so unhealthy. And then the royals are up there getting fat, doing whatever with all their slaves and shit. So if anything, it's actually gotten better. It just doesn't feel as good because we have social media that makes you have FOMO constantly.
I mean, quality of life has gotten better.
Social media is a big culprit. Yeah. And like just the, I don't know, recognition. Like people can fake it a lot easier with social media nowadays than they could before.
Totally.
Right. And I think that's one of the biggest culprits.
They can also make it a lot easier with social media, right? Because like all of us on here, we have been pretty decently successful in a relatively short period of time, right? In an industry that wasn't actually possible, honestly, before the internet, where you can just like pull data and do everything that we do. But also it isn't like that inherently difficult. It just takes more time and risk than most people are willing to do. And it's funny, I'm not really like a big pull your bootstraps up kind of guy because I do think there's a lot of circumstantial stuff that is hard to wrap your head around. But like we've had people that have come through like Scale or like in our different circles that come from like not a lot, and they figure out and they get their first win, and then they reinvest that into like 2 more wins, and the next thing they're doing 4 more wins, right? And next thing they know, you have a business, and they went from being somebody that was kind of doing nothing to now making multi 6 figures a year, and that's a pretty sweet lifestyle.
The pull yourself up by your bootstraps conversation works and is, I think, valid when you surround yourself with the right people, because then you can. If you don't have the option, or you're not near, you don't have that, like whatever's right in front of you in your direct life circumstances, until you get a peek out of that, you have no idea, right? Like if you're living in Africa, you don't really have, with no connection there, you don't really understand what it's like to live in America, right? And same goes for like your micro community. But when you get into a community with people doing shit you want to do, that's going to better yourself. Like that's how you can actually do. That's where it's like really direct one-to-one. The more you put in, the more you get out.
Yeah. And see, and that's the plus side of social media, right? Is you can choose to either be like a consumer or a participant. And if you're a participant, there's actually a lot of opportunity that's out there.
This around like the whole business aspect, we're kind of diving into this a little bit is, and I think, Mike, I told you, like, I didn't want to make bad financial decisions because I publicly said on the podcast and in general circles that I wanted top line revenue to be $1 million. And I felt like I was chasing that. And maybe one of these flips that we have going now, I would probably end up losing money on. And that happens in business. But there are other aspects of this business, especially if you continue to buy and hold and not just do strictly transactional business, that might go a little under the radar. And so just for my own business, we out of like 3 different holds, we have about $250K in equity. That cost me like $25,000 because they're pretty good Bury properties. $1,800 a month or 22-ish thousand a year in cash flow, $500,000 in depreciation and take off taxes. And like, I need to stack those. I guess it's a mental reminder to stack those also as wins and not just like the deals that get done on a daily basis.
For sure. Reviewing like your full financial picture like that, I think is really major. And a lot of people, I don't know if it's like the dopamine addiction everyone has, but they feel like if they aren't winning every single day to their expectations, that you're not doing very well, which isn't true.
Yeah. Even though if you compare it to the past 3 years of business, it looks great. So it's just what you're comparing it to.
It's hard though. Mike and I have this conversation. I always say this: patience is difficult, especially when you're building something worth building. Like it takes time and the patience. You're like, why isn't it going faster? My goal is $1 million. Why am I not there already? Like trying to make decisions every day to get there as fast as you can. And you forget to be patient.
That's why you just got to zoom out, right? I know, Dylan, you're a Bitcoin guy. So they always say in crypto to keep
just zoom out. Yeah.
Getting people to buy more. They just zoom out. Look at the graph. It keeps going like that.
I mean, they're not wrong.
Yeah. You can do the same thing with your business, right? Your real estate portfolio. And if you zoom out and it's kind of going flat or down, you probably should fix something because that's wrong.
Yeah. I guess the important thing though is track it. Have your KPIs, track your net worth, track your cash flows, and actually your CapEx expenses, not just your pro forma paperwork.
Yeah.
So try not to make emotional decisions too, which I think is the tricky thing, because everyone has hard situations that occur in business, whether it's like you got to fire somebody, someone on your team isn't performing, you lost a deal, you just wasted a bunch of money on marketing because you fucked up one of your lines on your Excel spreadsheet and just wasted that entire marketing batch, right?
That's happened more than you would think. Like
That happens to people all the time,
all the time,
right?
Yeah.
That's something you have to deal with, and you always have to have a contingency plan for it. But I do like this concept where business is mostly a marathon, right? And it's, it's a game of not best man wins, but last man standing. Because one thing I have found, especially in what I would call like fad businesses, which wholesaling is definitely one of those, real estate in general, where it comes in cycles. It's like you go back to pre-2008, everyone was getting into real estate, right? Then it kind of died for like a little while. And then you get to 2020, 21, everyone was getting into real estate. Then it like died for a while. If you're able to like keep performing in those middle periods between the exciting times, that's where you'll make the most money. Because then when the uptick does go again, you're already a pro, right? And you're not the person that's trying to figure it out while things are on a rocket ship.
Or you just might have to tweak one or two things that might be new, right? Versus reinventing the entire business.
Yeah. Exactly. Yeah, it's bigger picture. I mean, it's just important to look at that. But either way, I still think that if you are trying to make business decisions based off of what the feds are doing, you're dumb. Just focus on what you can actually control, because realistically, you're probably too small for it to affect you that much.
Yeah. And while everybody's running out, just keep doing what you're doing, because I'll contend that it's like, I don't care what they're doing, because I've learned how to operate in this like tougher interest rate environment. And it's actually fine. It works out great. I'm happy with it. And I don't want any competition.
If you do take a step back and look at number of deals, deal revenue, I mean, they're not far off from the past couple of years. And think how much the business has changed in those past 3 years too. Like
a ton.
SMS and texting or ringless voicemails, those are pretty much all gone, done. Cold calling sucks. I don't know if you guys have any success with cold calling lately, but it sucks.
We have a couple of deals we're closing off cold calling right now.
Nah, well, it's good for you. I don't. Like, I've spent a lot of money on that.
Yeah.
PPL has been okay. Direct mail is still winning. Even referrals, though. Like, actually, we could talk about this. There's a scale member. I won't say his name if he doesn't want it. But he just posted in our wins channel the other day where it basically is like, hey, my deal count or deal volume is nearly half of it was last year. But they just crossed one deal that will probably net him close to $100,000 that came from a referral just because he's been in business for a long time, where his gross revenue numbers are going to be better than last year. And we're in July.
And referral stuff, especially, I think, is such a validator of being patient, right? We had this call with our partners the other day. They're like, how do we do more of that? I'm like, it's just, equity, right? It is relationship equity that you have to build with these people where you're around long enough that they actually believe you can perform. Mm-hmm. It's not something that you go, I'm going to go make relationships, get referrals today. No, they're not going to send you shit. But if you do that and you're around for 6 months, 12 months, and they're also around for that long, they're like, oh, hey, you're still playing the game? Hey, me too. Let's do something together. And that just compounds over time. That's why like some of those people that have big name advantage, the Brandon Turners, even though he's losing everyone's money, I guarantee you the next deal that he raises money for, he will do it instantly because he has an incredible amount of relationship equity with a ton of people.
Might not be the current LPs, but yeah. You're right.
I hope. Good for him.
Right. Hey, but he doesn't need that many though, right? Like it goes back, even at his scale, he is still a micro business.
Yeah, that's pretty wild.
Like he needs so few customers to be able to do what he's trying to do, and pretty much everyone that's in all of our circles is in that same vein, honestly. And for some reason, people try to take this big business information and apply it to themselves in small business. It just doesn't make sense. Especially in real estate where it's like one-to-one transaction. It doesn't matter what the market sentiment is. You only need one person to buy your damn house. You need one seller, one buyer, and that's it. That's two people. You can't find two people in every market condition to do a deal. That means your deal fucking sucks.
I got a buddy here, and our favorite saying here is it only takes one, because sometimes it only takes one person to buy it. And like just one of these houses that we're selling now, it has a pool at it. And the one buyer, we haven't really had a lot of stuff on it, a lot of engagement, but the one buyer is going through like some kind of medical treatment where she needs a pool, right? And like automatically she is a buyer for this house because she needs a pool and not everyone else needs a pool, right? Like there's stuff like that.
There you go.
Mm-hmm. Absolutely. It's funny. I've listened to some of the Hermosi podcasts where they're doing like the live Q&A at his events and just be like, yeah, it's just like really saturated. And he goes, oh, wow, that's crazy. You've talked to every single person that owns a pool in Scottsdale, Arizona.
Right. Yeah.
And they're like, well, no. And he's like, then it doesn't sound like it's saturated.
Yeah.
Like you're just not talking to the right people.
I listen to some of this Q&A sometimes and I'm like, these people are dumb, but I don't know if you get that same thing.
Oh, dude. Totally, man. And like, it's funny. Dan and I were literally talking about this morning. I can tell why he's gotten so jaded. And this is also me currently as well, is going down this phase is as you've been in business for longer, and you realize honestly how fundamentally simple business is, right? You need lead flow, you need an offer, and you need a way to like collect that money and create that value, right? It's like there's so many different ways you can go with that, but it's relatively simple to put those things together once you know what you're doing. It's so frustrating talking to people that don't understand that because they try to complicate everything, you know, and they always like think that there's another bit, you know, it's fucking Alex Ramosa's show. I just talk about shit all the time. You just think he has so many good thought provoking things, but he's like talking, he's like, how many people here would be happy with $50 million? And everyone raises their hand and goes, cool. So you can stop trying to invent the newest vacuum cleaner. Stop trying to invent a startup. You can stop trying to like develop something that's never been seen before. Is like
your AI chatbot, but you're a wholesaler that you just for some reason need to develop.
Yeah, that's a lovely one. Yeah.
Exactly. Right. He's like, you can focus on just super basic, boring stuff. You can have a trade business, a service business, anything that you can do like right now that you can start from zero, you can probably scale to that same size. Right. And for some reason, it's like specifically newer people or newer entrepreneurs, they always are trying to build these crazy complex things that don't make any sense.
Something new. They want to be something new.
Yeah. Something novel.
And what's been the proof of me, so Dan and I, we've had several businesses now. The wholesaling we've been doing the longest. We have Scale, which, you know, we've stopped like really pushing quite as much. But for a while, that was going pretty well. Right. And now we have our lending business. And like our lending business over the next 12 months will probably do close to $1 million in profit just off of points.
Wow.
Right. Because we have the lead generation through this podcast, through our communities, through our referrals, through a sales guy that's out there prospecting, right? We have the ability to create the loans through our own money, through investors that invest with us, through hedge fund connections, and we have the ability to process it in the middle. And that's it. And it's going to be a 4-person business that will likely do close to $1 million in profit over the next 12 months.
I have a follow-up question to that. When did you decide, like, I mean, I guess pivot, right? Because everyone's like, do you pivot or do you just stay and keep doing the same thing and double or triple down on what you are doing, which for you guys would have been wholesaling versus, you know, I don't think it's going to take that much additional effort to put this off the ground and it might be a better business model.
So I would say that we decided to pivot. It was like last fall because most of last year we were trying to franchise our back at home buyers business through a partnership program, right? And that was our focus.
I will say, I would step back with that too. We probably didn't pivot soon enough because we had the conversation a year prior and we had talked about what do we want to do? How do we want to grow the business? And the lending business came up because we had been doing lending, but then we ultimately started to do the franchise model. We're like, well, let's give this a go.
Yeah. And so we spent an entire year and several $100,000 trying that before deciding we didn't want to do it and canning it completely.
Yeah.
Right.
Like completely.
And in the same time, we were doing lending with Dan and I's own capital that we'd made through our businesses just to get more horizontal income. And so then when we got rid of that, we were like, okay, so we are going to do the local home wholesaling and flipping business, which we already know what that looks like. We know that there's a ceiling to that is not what we want. Let's push into the lending business a little bit more seriously because we know people that make like FU money with that. And what Dan and I both wanted was enterprise value. We wanted something that was actually going to create a sustainable, repeatable business that you could grow to a much higher ceiling than a wholesaling and flipping business. And with wholesaling and flipping, Cole Rudd Johnson, he posts a lot about this, that like the best size of a wholesaling business is like 1.5 to 2.5 million a year. You have 5 team members, you're doing, 5 to 8 deals a month kind of thing. I fully subscribe to that. I think that is such a true sentiment because as you get larger, your profit margins get thinner. You're still taking on more risk, right? And it gets kind of dicey. And so we knew that's where we were going to get to. And so the lending business became the focus. And so at this point, it was like maybe 9 months ago. And it took us the first, I would say, 6 months to figure out like the foundation, what the seats were that we needed to fill and kind of find those people. And then over the last 3 months, it's been the start of the rocket ship trajectory. And just yesterday, actually, I put together our financial forecast. And dude, it's fucking zoomed out Bitcoin right now because it's just like nothing, just going up. And it's going to continue to do so for the next little bit.
It's kind of like a software where like you don't need a lot of incremental inputs for greater outputs, which that's not the case in wholesaling. You basically need to step on the gas for either people or marketing.
Yep. And as you do that, your profit margin goes like this. And so there's like a crossover in like the wholesaling flipping business where it's like you're in the sweet spot of scale before it's step functions in that business. Like you got to hire a bunch of people, your profit margin have to shrink, then you have to get good at that level. And if you're not good at managing a big giant team or you don't want to, there's no point in doing that in the wholesaling flipping business because it does take a lot of effort where, to your point, Dylan, with the lending is we can do a whole lot with small team management, which is actually really fun.
Probably safer.
Totally. Because we just pass off the risk to the hedge funds on stuff that's kind of dicey and they'll buy the loans and we just carry the good stuff in house. And then, well, I forget the acronym we came up with earlier for the effort to output or
IMPU and NIPU.
He doesn't even remember.
So, something like that. But that for, unlike the lending business, it still applies, but it's very different. It's much less asymmetrical.
Yeah.
Right. Because you can have your base hit loans that essentially cost you nothing that you make $4,000 to $7,000 on. And you can basically just churn through those. Then every now and then you'll have your big one where you make like 20 grand on. And the amount of work to do that versus like the other ones is way less than on the wholesaler flipping side, where you're going to make 15 grand on a wholesaler, $80,000 on a flip, right? That work ratio versus like the $7,000 to $20,000 on a loan is so off.
Yeah, that makes sense.
Right? And you can do a ton more of them with a much smaller team.
Totally. Yeah. And the interesting thing that I find interesting is like going back to when we hired our first business coach and he really broke it down. He's like, there's 4, but for this conversation, we'll say it's 3 departments for every single business: marketing, sales, operations. You have to bring in leads, like Mike said earlier. You have to convert them into opportunities, and then your operations are doing the work to provide the service that they're paying you for. And so we're able just to apply that. We knew that from wholesaling. We knew that from the other businesses we built. The one caveat I think that helped us kind of have like a nice baseline to start out with was brand equity that we had already built up in the industry.
Sure.
That's like our competitive advantage, and we'll continue to use that as our competitive advantage because we do have.
And the networking, right? The GoBundance crowd, like probably
Exactly.
people who are local to you up there. I would assume that too.
Right. People know us, and we have a relatively good brand, and people trust our brand. And so they're willing to go with us, or they hear our name. They're like, oh, okay. Yeah. It's not a random name that they're going to go apply for a loan with.
Well, in wholesaling, we talk on that specific size that you mentioned, like 50 to 60% probably net profit margins on industry average.
Oh, for wholesaling?
Yeah.
Yeah, I think if you're small, right? Like once you start to grow, it goes away super fast.
Yeah, well, that's my point. I'm assuming that the lending, you need probably some software and staff, like salary.
Yeah, like 2 team members, like honestly, and a VA. And our profit margin is like 90%, dude. It's crazy.
Yeah.
That's pretty high.
Yeah, that makes sense. If you're going to pitch these 2 businesses to like Shark Tank, the lending wins.
Totally. People sell lending businesses on high multiples because the book of business and the recurring revenue is so valuable. Like finance, like private lending business typically trade at 7 to 10x EBITDA.
Yeah.
Right. Which is like a lot.
That's pretty good.
So for something that is fundamentally like air, right? It's just like it's numbers on a spreadsheet. It's not like you have a campus. It's not like you have some like IP. You're selling a commodity.
Yeah.
Which is money. Money you can only sell for so much.
So if Mike and Dan are filling out their one sheet and they have $1 million a year top line lending business, let's say 80% EBITDA, that's 800 grand a year at a 7x multiple, that's a $5.6 million business.
Yeah. And so depending on, who I'm trying to flex on.
Yeah.
It'll be
EBITDA. Yeah.
Be 80 million one day.
When I'm doing my 7 to 8, it's a 20x.
Yeah, that's right. Yeah.
Absolutely.
Yeah, that's right.
You know what's funny? I guess I've never even thought about that. You could do that, couldn't you? Yeah, definitely. We're going to be flexing.
I'm sure there's people who do it, like, and that majorly inflate their net worth.
Yeah. Well, even the one that they did last week, I think we
yeah.
talked about this briefly, but yeah, he had an $80 million portfolio,
$15 million net worth.
$15 million net worth. But, and so one of my podmates dove into that. And with the cap rates that he went off of, that's absolutely true. The problem is, because one of the guys on my pod, it's actually John Brooks, he's on the show. He's very much a data guy. And he's like, I'm calling bullshit on this. So he went and did all this research and found the cap rates in that market. He's like, this dude's full of shit, dude. The cap rates are like 2 points higher than he said they were.
Wow.
So this guy's actually worth nothing. He's underwater.
Oh, wow. Yeah, he's underwater. He can't sell that shit. If you can't sell your assets, then you aren't worth what you think they are.
Totally. Especially when it comes to commercial stuff.
One last question, we can round it out because this didn't affect me, but it affected a friend of mine. It's on the lending side. So you can see if you give an answer. When he's bought a 7-unit building and he went to go refinance it. And I understand that they automatically put in a vacancy rate, even though if it's not vacant, they put in like a 5% vacancy rate. Where he's getting boned is they are re-evaluating his property at like a new tax basis. which is like 3x what it's currently at. So kills all the cash flow on the deal, which I would understand if it was a straight out purchase, but doesn't make sense to me on a refi.
Yeah.
So is that just the lender being a dick?
It's got to be.
The name, like the game for lenders right now is how can we find everything possible to not do the deal?
Wow.
A lot of scrutiny.
It has never been worse than right now. It's unbelievable, honestly. Like we see this both with the lending business and for me as a borrower. I've been trying to get these HELOCs for like 2 months on a couple properties that I have very significant equity in, a couple of rentals. And I went through all the hurdles for it. I've given them everything. I've like paid my accountant to update my tax returns that had like some things that were unclear. I did all this bullshit. And then on Friday, I got like a soft rejection. They're like, well, your debt to income just isn't good enough because what we do is we can only take 75% of the rent
I've heard this
on your rental portfolio. I'm like, well, yeah. So then if they don't cash flow 25%, like then yeah, it's going to lose money. And they're like, yeah, so you have all these properties. And even though on your P&L, it's basically a zero for your whole portfolio, we have to count it as a loss. I'm like, that doesn't make any sense, dude. And I sent them this scathing email with like everyone included on it. And I was like, you're telling me that my P&L cannot afford this $600 a month payment if my HELOC is fully drawn. And I was like, here was my income 2 years ago. Here it was last year. Here's my P&Ls for this year, which is showing maybe twice as much as those last two tax returns. Like, what are you talking about? And then they're reassessing it.
Oh yeah.
Right. So you can challenge it, right? Yeah. And people don't always understand that, but you have to have a convincing case. You can't just go, I think you're wrong and it's hurting my feelings. If you actually say like, here's why you're being dumb, they will listen, but they will also find reasons not to do it.
I bitched about the one that were trying to lend out like a 40% LTV like 2 weeks ago. And I sent them a nasty email back and they're like, oh, we have another credit meeting. And then they offered to go like 60% LTV. I still said no, but they did come back at 20% higher.
Yeah.
I don't know, man. We have another one right now. And then I'll get off this about where we're having to go back to one of our borrowers because the underwriter found that the property has a lot that's attached to it that's extra. And the borrower's insurance does not cover the lot. And they need the insurance provider to have liability insurance for the lot. And we're like, who has that? Nobody. No. Like, so if somebody goes and fucking rolls their ankle playing soccer on your lot that they're trespassing on, like, what are you talking about?
I want to bang my head against the wall for this guy, and it's not even my thing.
God, so crazy, dude. So crazy.
But that's the game right now. With stuff is so risk averse, they're just like finding any reason not to do it.
Yep.
Anyways, all right, guys, we'll wrap up here.
Well, let's hope it gets better.
Yeah, it's going to get a lot worse before it gets better. That's for sure. So we actually have a meeting, one of our guys does with one of the main hedge fund guys that we work with about all the increased scrutiny the stuff's going to be facing starting in August. So
like tomorrow?
Yeah, like starting like next week, dude.
Yep.
So if anyone's trying to get DSCR stuff over the next like 3 months, it's going to suck ass. So you might as well just start it now because it's not going to get better for a long time.
Get going.
So slacapital.com/apply. All right. You guys have a great rest of your week and weekend, and we'll talk to you guys next week.
See ya.
Thanks for listening, everyone. If you want more from us, you can shoot us a follow on Instagram. I am at Mike_invest. Dan is at InvestorMan Dan. And Dylan is at Dylan_does_deals. Shoot us a follow and send us a DM to let us know what you think of the show.